The following Crypto Academy video is designed to help you understand algorithms and their role in the market. Trading can contain substantial risk. By watching this training, you agree to the following disclaimer and accept full responsibility for your own investment decisions. This lesson will focus on answering the following questions. Before we continue, pause the video, read through them, and be certain to minimize any distractions. Algorithms are a part of our day-to-day life. If you have a mobile phone, there is an algorithm running behind the scenes. The computer that you may find yourself in front of right now, there are algorithms in place that are helping you access this information. Now, automated trading uses computers that are programmed to follow instructions for placing trades, and they can interpret data much faster than humans can. The traders who make use of algorithms also receive more systematic trades because the human emotion is not involved. There are simple algorithms that will buy or sell when a technical indicator gives a certain confirmation. There are algorithms that trade simultaneously with you, and some automated systems are self-learning. There's a lot of different variables that go into programming an algorithm, and having it be a quality algorithm requires thorough backtesting before it's used in the real markets. Some common trading strategies that involve algorithms include trend following, arbitrage, range breakouts, amongst many others, and there are even some algorithmic systems that are designed to identify and then trick other algorithms. In a very large financial market like the foreign exchange, there is a very large percentage of all of the daily trading activity that is controlled by algorithms. So now we can take this knowledge and go deeper to identify the algorithms in action and explore how they can help move our positions into potential profits. Here on the GDAX exchange, we can see algorithms in action by identifying these orders that are very quickly populating onto the chart. Now, whether you're looking to be a buyer or a seller, it's important to be able to identify how quickly some of these levels pop onto the book and then immediately get removed. These algorithms are not just used on this one exchange. We're going to go ahead and transition to see what it is that we're going to look for when we're identifying algorithms to help us with our trades. When we see something like this happen, where the price is changing very rapidly on where the orders are diversified, notice how it is climbing higher, closer to where current price action is. This is being controlled by an algorithm right now. The fact that it can seamlessly consolidate these orders, change where they are listed, move them closer or further away from current price, it doesn't just happen on the buyer side of the market. We're going to be able to identify this on the sells as well. So all of these sell limits, all of these buy limits, they're going to change, they're going to fluctuate. This algorithm right now that we see controlling the orders around $766 and $781, this could very well be the same person that has a lot of Ethereum at their disposal, ready to trade. They're still potentially accumulating a greater quantity within their position, but in a sense, they have control over the price. They are regulating how high or low the market will go, and they are having this algorithm that is designed to change their orders, consolidate them at specific price points, move them, and regulate where the price is going to go. And it's going to be considering whatever it is that they've programmed into it. Notice how we've moved now to the $767 area rather than 766 for these buys. The sells getting closer to 783. And so this regulation that's happening right now. And when I talk about the regulation, I'm really meaning the way that they are controlling the price. The point of control that they wish to see price trade at right now, they want to attract some people into the markets right at this quarter level of 775. So when we see them moving the market and determining how much they're going to let price range, if somebody did really want to move the market and change price in a significant way, they would have to execute a very large position. Because right now, on the buy limit side, the total accumulation of orders between current price at 774 and where the algorithm has kind of set up shop, there's about 4,000 total buy limits that we can see that are waiting here on this exchange. On the sell side, similar scenario between current price that has quite a large quantity of sells waiting and where we see that algorithm setting up. There's about 4,300, 4,400 now. And these numbers, we can see just how quickly they can change. And so if the algorithm decides that once a certain candlestick pattern prints, or once a certain profit objective is met for the day, or perhaps the algorithm is designed to accumulate a specific new percentage of their position. Perhaps they started the day and they owned 100,000 Ethereum, and by the end of the day, their goal was to make 5% profit and also accumulate another 5,000 Ethereum. There are algorithms that can be very, very, very precise in their method and in what their objective is. It's essentially like you're coding a strategy and having this artificial intelligence that can act in milliseconds, microseconds, control where the orders are at, control whether it's time for you to buy or sell. Of course, an algorithm is not perfect, but we are getting a very powerful example right now with how the depth of the market is pretty evenly diversified. We can see where our high and low range is for the current price action and everything in between. This is where the retail traders are going to be participating. This is where the individuals that only have a few Ethereum are going to be buying and selling. This is where they're going to show certain things on the chart to entice you to take a position. Whether you're looking for candlestick patterns, whether you're looking for momentum, whether you have Fibonacci's drawn, maybe you're looking at the daily trend and you're speculating what could happen, seeing how we're below the open of the day. And we at one point we were up at $808. These orders that you see controlling the range of the price action at this very moment, they were still in play when price was up at the high of the day. They were still in play when price was at the low of the day. They were in play when price opened the day. These orders, these algorithms, these large investors, the individuals that were early adopters, the individuals that had large amounts of capital to move into the markets, the individuals that really are the ones that have the experience and knowledge to effectively print candlesticks and make things happen. And you can see again just how quickly those orders change based off of what the price action is doing. And it essentially what we're seeing happen right now. Perfect example of how the candlesticks physically form. What is going on behind the scenes? It is very, very powerful to take the time to really just watch and observe. You can trade off of this. You can implement areas of supply and demand, support and resistance onto your chart. If you notice key levels that do not change, like what we're seeing right now, because having that awareness that this market right now, the way in which it's moving, these orders are going to continue changing, the range is going to continue changing. There will be times where price gets to a specific area, whether it be a quarter level, whether it be the low of the day, whether it be the high of the day, whatever it may be, and you're going to see thousands, hundreds, thousands, however large of a quantity of orders, just a lot of money sitting on one specific price level. And what you'll notice is that that does not move. It literally sits there. And there's been times where I've seen 5, 6, even 7,000 Ethereum sitting on one specific level. And it sits there all day. It sits there from when I identify it in the morning at New York session. The entire day happens, whatever price action occurs happens. Maybe that level has been touched a couple of times and it's been slowly getting chipped down because there's less and less support for people that want to buy into the market at that particular price. But when the level doesn't change, that's going to help you with your bias establishment if you're looking for price to move in a certain kind of way. And then on the technical side, you're getting specific confirmations that price is going to move in that direction. Verifying with the order book that the quantity of orders sitting on that price level that you identified is continuing to go down. That is going to be a very good sign, because even though we know these orders are being governed by algorithms, having the ability to identify where the larger investors are looking at, what their sentiment is, what they believe the best time to buy or sell at is. Very effective method to incorporate into your trading, because this information is not easily accessible in the foreign exchange market, and it's not just limited to Ethereum. We have tons of order books that we can look at. All of the major cryptocurrencies are available. You can go and you can look at other cryptocurrencies that aren't even listed here, depending on the exchange that you're looking at and depending on the source of data that you're getting your information from. So don't feel limited if you choose to incorporate order books into your analysis, but understand from the interface itself, it's very easy to see what's going on. You've got the volume displayed in front of you for the last hour. You have the volume displayed in front of you for the last 24 hours, how many total sell orders, how many total buy orders have moved through the market, what trades have happened in the most recent time from when you've been looking at this order book up until now. We've got the last like 10 minutes of all of the orders that have happened, buys and sells, the quantity, the price. We've been able to see that price hasn't really moved up until now. And you can do this every single second of the day. These order books are always available to you. So I encourage you to take the time to really just open your mind and check them out. And as I mentioned, there is more than just one order book you can look at. There are other exchanges out there that offer you similar information, a visual depth of the market, where you can see the sentiment of where people wish to buy or sell at, being able to identify specific price levels, the quantity of how many sell limits or buy limits are sitting there, trade history, the quantity, the price, the time, the candlesticks, different chart, different type of technical analysis, but same information, just listed on a different exchange. So that is why you're going to see different levels of volume in the last 24 hours, and also sometimes a little bit of a discrepancy within the actual price. In summary, algorithms are present in any financial market. There are pros and cons to algorithmic trading as part of your strategy, because while they are able to perform certain actions more efficiently than humans, they are still robots, and they don't have the added benefit of tapping in to human emotion, to human intuition, and any algorithm at some point in its existence was also programmed by a human. So inherently, the algorithm is going to have certain thoughts, ideas, and beliefs instilled inside of it. Be sure to leverage the resources made available to you, and the most important thing is to stay plugged in. As you implement the information, Ask questions and remain open minded because all trading requires is persistence, discipline, and acceptance that you can and will learn this skill set.